So the question is, in case of valuation based on discounted cash flow method, you will use projected cash flow or projected P&L or projected balance sheet or all of them put together. Invariably, these projected financial statements as a valuation professional will be provided to you by the company which is interested in the valuation getting done. And you are absolutely right, because we are in the business of doing the valuation. We are not in the business of making projections. And number two, the knowledge and understanding of the industry and the company will be more with the company than with us. So therefore, uh, when it comes to the projected financial statement, we obviously need to depend on the client. The client has to give us the projected financial statement or the cash flow statement, P&L, and the balance sheet. But see, remember, many times what can happen, and I'm saying more in case of valuation of securities and the financial assets, and that is where you need more often the projected financial statement and the cash flow. Now the client is in urgency to get the valuation done, and it can vary, because sometimes the client can be too big, some clients can be too small, or clients can be medium. So many times the client will have the is infrastructure and the expertise and the resources available for doing the complete projections by themselves and give it to you. So in that case, our responsibility is only to go through those projected financial statements critically and come to a definite conclusion as to those projected financial statements are as realistic as they could be. So that is what is our responsibility as the valuation professional. Why? Because if there are errors, if the projections are too flowery, or they are too optimistic or too pessimistic, then the valuation is not going to be fair. But in some situation where the company which is wanting to do the valuation is a small size company, they do not have the expertise or to do the projections, and that is where they can take your professional help to support, because you understand how to do the business planning, you understand how to make the budget, you understand how to make the projected financial statement, you understand what all should be part of the P&L, what should be part of the balance sheet, what should be part of the cash flow. So you have a very good understanding and the knowledge and the expertise as to how those projected financial statements are to be made. Now you don't take the responsibility of making those projected financial statement. You can take the responsibility of supporting and helping professionally the client in making those projected financial statements. So the responsibility still lies with them. You are only helping them in making those projected financial statements. And it is understood that when you are helping them in making those projected financial statements, you are taking due care that those projected financial statements are as accurate, as realistic as possible.